Supreme Court gives clean chit to Adani in Hindenburg case, dismisses all allegations, says there is no need to interfere with the SEBI probe. Markets gave thumbs up to the Adani Hindenburg case. Nifty is off day's lows, Sensex below 71,600. Broader markets outperform. Adani Group companies at 57,000 crore rupees in market cap. Meanwhile, IT and metals extend losses. PSU banks, realty and oil and gas trade in the green. And Petroleum Minister Hardeep Singh Puri has poured water on fuel price cut expectations. He said there has been no discussion on oil companies on the fuel price cuts. And India's manufacturing PMI falls to an 18-month low in December, falls to 54.9 in December from 56 in November. Hello and welcome. You're watching Last Trades. I am Agam Vakil, and in this show we talk about bulk deals, block deals and several volume buzzers. And today, of course, the Adani Group companies do stand in terms of volumes, but if you keep that on the side as well, there are plenty of other pockets in the markets which are extremely active. Well, for now, at least as far as the markets are concerned, we've seen a little bit of a lift-off from the day's lows. At the moment, we are seeing a little bit of recovery, even though the benchmarks are currently trending in the red. They're not anywhere close to the day's lows. And well, of course, while the Sensex and the Nifty are currently trending lower, we do have the Bank Nifty, which will be in focus and which is now nearly in the green at the moment. Of course, we also have the weekly options, the first weekly options expiry for the Bank Nifty of the year, and it's certainly been a very volatile one, to say the least, considering that's the intraday chart for you. As you can see, it's certainly been a very interesting one as well. To very quickly take a look at some of the bigger movers in the broader markets. And it is the broader markets where we are seeing the most amount of activity. So, say for the whole host of your Adani Group companies, which are in fact advancing and have advanced through the course of the day, and even though they have come off from day's highs, they're all mostly largely trending in the green. For example, Adani Enterprises, Adani Ports, Adani Green, Adani Power, all of them are up and about and advancing and making good gains through the course of the day. And as I've already suggested, that they have already added about a good 57,000 crores in terms of the market cap only in today's day of trade. Besides the Adani Group companies, we're looking at Bandhan Bank, which is up around 5.9%. And this is also buzzing on big volumes. We also have gains in Bank of Baroda. That's up around 1.6%. And this is largely what's happening in the Bank Nifty in terms of some of your relatively larger movers. Even if you consider the mid-cap index, that's, while it does have a mixed trend, within it, we do have gains in the likes of, something like a Biocon, which is up around 4%. Paytm is up around 3.7%, and Indian Hotels has once again resumed its up move in today's day of trade with a gain of around 3.4%. On the losing end, however, a little more weakness in some of your IT names. That would include something like an Emphasis, which is down 3.3%. Coforge is declining around 1.6%, though it is off day's lows. And we also have some amount of weakness in Persistent Systems and L&T Technology Services. So, well, that's largely what we have in terms of the broader markets. From there on, let's talk about all the companies that we are discussing in today's day of trade. And well, we do have Avenue Supermarts, an update from there. So we're going to talk about that. FDC, of course, will also be in focus. We have something like VST Industries, where we understand a marquee investor has come in and increased the family stake in VST Industries. We'll talk about that in a lot more detail. IOB, Central Bank, and Marksans Pharma. Marksans Pharma is the other sharp mover in today's day of trade, so we will be addressing that as well. And from there on, let's move on and pick up on the first stock that we want to address, and that is FDC. And this one has jumped on large trades. It has seen a substantial amount of traction in volumes, and of course it's also trending higher in today's day of trade. Let's get in our colleague Mihika to give us an update on this one. Mihika, good afternoon.
Good afternoon. So yes, FDC is one of the top volume buzzers for the day, with volumes at 19 times its 30-day average, and it's reached an intraday high of 8.58%. And while the stock is up 4% in the past month, it's up 52% in the past year. The total volumes did stand at 36.73 lakhs shares, and the highest volumes were at a price of 420 rupees. Now, when you look at the valuations with respect to the peers, it is pretty cheap, and it's among the low three. It has a P ratio of 35.56, while Lupin has the highest and is the most expensive at 148, and Dr. Reddy Laboratories has the lowest P ratio of 21.88. In terms of its Q2 results, it did post a revenue growth of 9.3% on a year-on-year basis to 486.37 crores. EBITDA was up 13%, and this was on the back of improved cost of goods sales and lower operating costs. And net profit also saw almost a 35% jump. In terms of the company, its top brand Oral Electrolytes has 71% market share in the market it operates, and the company is also the category leader in the sections that are more fragmented in terms of the market, and this is brands like Electral, Ziffy and Enerzar. And finally, for the future outlook, the company is growing its profitable export business at a small scale, and it plans to do that, and it has a more prominent presence in the west and northern parts of India, but it's going to penetrate into the east through Bihar, Orissa and then West Bengal. And lastly, it's been refraining to introduce newer brands and focusing on the line extension of the current brands, but it is looking into new introductions to their portfolio as well.
Mihika, thank you so much for getting us those updates, and some very interesting insights coming in there as well as far as that particular counter is concerned. Do keep that on your radar based on all the details that Mihika has given us. And from there on, we move on to a large cap stock, and that's DMart. So Avenue Supermarts has come out with its quarterly update, and at the moment, if you consider today's volumes as well as yesterday's volumes taken together, these are the highest that we've seen since the month of October in 2023 on an intraday basis, of course. Now, Avenue Supermarts has given us a significantly strong revenue growth on a year-on-year basis, but this is relative to the rest of the market. The question really is that where do you go when it comes to valuations of this particular company, keeping in mind the several challenges with respect to its profitability. While it has strong profitability, the margins is what it does see in terms of volatility. But I'm going to say no more and get in our colleague Mahima to give us an update on not just what's happening with the company in terms of its quarterly update, but also what a whole host of brokerages are saying about this. Mahima.
Right, Agam. So as you rightly mentioned, the brokerages have a mixed review on Avenue Supermarts. But before I move on to the brokerages, I'll quickly talk about the company update that came in from their exchange filings. They've posted the revenue for the Q3, and the revenue has been up 17.2% year on year. And they've also added 5 stores in Q3, and their total stores now stand at 341. Now, moving on, let's find out what the brokerages have to say. We had a City report on Avenue Supermart, which has maintained a sell rating with a target price of 3,100. They've mentioned that Q2 FY24 throughput remains weak and slower store growth is quite disappointing. They believe that revenue per square feet has remained impacted because of their inferior product mix and the store additions in smaller towns. They've also mentioned that they remain cautious at the current valuation given the risk around the store additions. We also had a Morgan Stanley report on Avenue Supermarts, which is quite opposite to what Citi has to say. Avenue Supermarts still remains a top pick for Morgan Stanley and has rated overweight with a target price of 4,471. They believe that Q3 standalone revenue was lower 5% as per their estimates. However, they believe in their network expansion and they also have given risks to upside as to aggressive store expansion and improvement in product mix. They've also given risks to downside, which is failure to expand DMart Ready in large cities. However, overall, they've given a very positive review about Avenue Supermarts. Talking about the stock performance, the stock hit an intraday low of 3.98% today, and the stock has fallen 2.27% YTD overall if we see. And if we talk about analyst recommendations, they also give a mixed review where 11 say buy, 6 say hold, and 8 say sell. So overall, a mixed review for Avenue Supermarts on the streets.
All right, Mahima, thanks so much for getting us those updates. Certainly an expensive stock, and a stock which in fact also enjoys a certain scarcity premium, considering institutional and promoter holding is substantial, and if I'm not mistaken, well over 90% as far as their holding is concerned in Avenue Supermarts. But again, you know, it's a mixed one, and that's largely on account of the kind of valuations that the company enjoys. But on that note, we slip into a short break, but on the other side, we talk about a whole host of stocks that are lined up for last trades. Stay tuned in. Welcome back to Large Trades, and now we put spotlight to two relatively smaller PSU banks, Indian Overseas Bank as well as Central Bank of India, and they are both also buzzing on account of large trades as well as volumes coming through. Let's get in my colleague Harsh Seta to give us an update on this one. Harsh, good afternoon. What do you have for us?
Well, yes, Agam. So, relatively, as you correctly mentioned, relatively smaller PSU banks. But, the kind of volumes that we're seeing is probably just 0.01% of capital. But when you're looking at it in the overall context, the free float for both of these banks is 4 to 7%, and therefore you have a very, very thin free float in any case. And when you are factoring that, when you're taking that into consideration, you are seeing that any kind of large trade could start to impact the stock price, and therefore you're seeing sharp movements on both of those counters on an otherwise, in an otherwise weak market overall. I mean, the broad-based markets are doing quite well, but otherwise. When you're looking at these two counters, what one must keep in mind is they're already trading at rich valuations. The central bank is trading at 1.5 times price to book, and Indian Overseas Bank is trading at 3.2 times price to book. That's more expensive than an HDFC Bank. Again, largely due to the fact that they are their free float is very, very small. So a couple of those things to be kept in mind, but two large trades coming in, 11 lakh and 10 lakh shares each, due to which you're seeing a little bit of a buzz on the stock.
Right. Thank you so much, Harsh, for getting us that update. Of course, we must remember, and as Harsh has already pointed out, it is, these banks also enjoy a certain scarcity premium because of the fact that the free float is not a very large one as compared to several other stocks and perhaps many which are out there in listed states, especially in the private sector space. But from there on, we move on to VST Industries. Now, we spoke about VST Industries in yesterday's day of trade as well on account of that big block deal. Of course, it was locked in an upper circuit yesterday. Today as well, it started off with a lot of strength, but it has given away a lot of its gains, at least in today's day of trade. Let's get in my colleague Anushi Vakharia, who will give us perhaps an update and a little bit of a history as compared to when it comes to Radhakishan Damani and his family's ownership in VST Industries, as well as several other factors that we can talk about. Anushi.
Right. So as you mentioned, the stock was in focus yesterday after the bulk deal happened, wherein Radhakishan Damani increased his stake of about 1.44% in BST. So this was after he bought about 2.23 lakh shares at a price of rupees 3,390. But now if you look back at the history, just let's go back to March 16 when the initial investment took place, and he with the initial investment stake of being 25.95% through his investment vehicle Brightcom, which gradually increased to 32.89% in the September 23 quarter, if you look at. So now with this, there is another 1.44% stake. That comes about 34% cumulative stake. But to understand why the increase in stake is happening, let's just look at the operational performance over the course when he first made his entry to this point, wherein if you look at the revenue from operations, they have increased from rupees 883 crores to about 1,672 crores right now, showcasing about 10% of revenue CAGR growth between the FY16 to 23 period. And if you look at the recent quarters though, while the revenue growth did show a good upside, the EBITDA margins have gone down. Like if you look at the FY16, it's about 26.9%. That has now shifted to 22.9% in the FY23 year end. And in the recent quarters also, the last September quarter, the margin stood at about 17.4%. So that remains a question as to what is driving the margins lower. But now if you look at the stock performance has been up about 24% in the past 1 year and about 14% in the 6 months. So that is all on VST Industries today.
Right. So basically, there are two takeaways here. In this case, the stock is showing a reasonable amount of growth. Shows it's in double digit since the time that the family has started buying stake and gradually increasing stake in the company. And the second takeaway, of course, is that we must remember that the ownership is not just one or two of its entities. All the entities, along with several other family members, which have in fact increased, taken together, will come together, and that's the reason why we're seeing that large number when it comes to ownership in that particular stock. And that's the other big takeaway, that is also, of course, increasing. The question really is that despite the fact that volumes have not exactly been great, we do see an uptick in revenue. And there has been a little bit of pressure when it comes to margins. that's still we still have to wait and watch whether or not we are going to in fact see an improvement there. But also remember that VC Industries, while we have seen an improvement in its revenues and its EPS continues to grow, we really haven't seen too much change in the stock. So that actually begs the question of whether or not there is in fact value in this particular company, and is that the real reason why the family is in fact going ahead and increasing stake? That's the big question mark, and that's perhaps one of the reasons why, well, there could be conjecture that the family has looked at it and increased their respective stakes in the particular company. But from there on, we move on and talk about Marksans Pharma. This is the final stock that we want to talk about in this show, and that one is also up and about, in fact trading near life highs, and if I'm not mistaken. But I'm going to get in my colleague Hemansh to talk to us about that one. Hemansh, good afternoon.
Good afternoon, Agam. Marksans Pharma, the stock is a three-bagger in the last year, and this comes after the company, it's really on high volumes today, nearly 5 times their 30-day averages. And what we are seeing play out for this generic pharmaceutical manufacturer is the fact that it has seen some tailwinds in its direction. It operates in markets such as US, UK and Australia, shipping its products there, and 40 to 44% of its market is in US, and then you have the other half in Europe, and then 10% contribution of sorts is coming in from Australia. And what's really fundamentally what's been exciting for this stock lately is the fact that it has a robust pipeline of about 6 to 7 approvals that are underway. It also is eyeing to increase its foothold in these key markets. Lastly, the company is also planning to apply for Brufen as one of the drugs it's going to be manufacturing, which has a very sizable market, and you're going to see substantial accretion to its top line as well as margins, which are going to translate to bottom line accretion. And that's really what's auguring for the stock really well. No apparent news flow, but it's certainly one of the top gainers on the Nifty 500 today.
Right, and Brufen is going to be a game changer because it is such a widely used drug. Well, Himash, thank you so much for joining us and getting us that bit on Marksans Pharma as well, which is also one of the biggest movers in today's trade in the broader markets. But from there onwards, we move on to Bengaluru-based car rental platform Zoomcar. Recently completed its SPAC merger and listed on the NASDAQ at the cusp of the new year. To talk more about that, well, we spoke to the management, that is Greg Moran, that is the founder of Zoomcar. Listen into what he has to say.
People have to realize that when you go public, it's always just one point in time, and being a public entity, it's a journey, and so just going and completing a listing is not a destination in and of itself, and value gets created over multiple quarters, multiple years, and generally speaking, there's a cadence and a trajectory towards building that overall footprint, building that story, building the narrative, and showcasing those fundamentals consistently over time. And we're confident where the fundamentals of the business are in terms of growth and profitability, and that's something that we'll be talking a lot more about here in the coming months.
And with that, it's a wrap on large trades, but don't go anywhere. On the other side of this break, we get you India Market Close. Stay tuned to NDTV Profit.